Reserve Bank Governor Lesetja Kganyago says proposed changes to how banks calculate interest rates could lower borrowing costs. Right now, banks are adding 3.5 percentage points to the repo rate to set the prime rate. But banks often add more to this rate depending on a singular client's risk profile. Arabile Gumede spoke to Kganyago and joins us now from Davos. Arabile, good morning. And we know that those rates affect almost every life, every aspect of life if you're actively involved and have the opportunity to be actively involved in the economy. So what were some of the, some of the ideas and some of the tenets of his position? Good morning again.
Yes. Yeah, good morning, Iman. Look, the governor is actually saying to us over here, and he actually wants to do away completely with the prime lending rate. That's the rate as you've just described it, where you have the repo rate. That's what the South African Reserve Bank every 2 months makes an announcement on to say that interest rates will go up or down. That influences how much you and I pay for any debt we may have, any house, maybe if you're paying for your bond or your house, your car, on any debt that you have there, your unsecured credit, whether it be credit cards or other loans, etc. That is impacted by what the Reserve Bank governor says every 2 months. And he'll have another one actually very soon. I think it's actually next week. But now, what then happens is a 3.5 percentage point mark is added. So currently, the repo rate is sitting at 6.75%. If you add 3.5 percentage points to that, you get to 10.25. And 10.25 is now the prime lending rate. That's what the baseline is for clients usually to pay, for customers, for you and I to pay at the store or at banks, etc. But now he wants to do away with that prime lending rate because he feels that banks often start at the prime rate and then increase the margin depending on how risky we are, whether we've continued to pay previous debts, whether our job security looks intact for them and good enough for them, how much we earn, etc. And if we don't, if banks actually charge that additional portion on top of the 3.5 percentage points, he feels that that may disadvantage ordinary South Africans, especially when the Reserve Bank has been trying to actually decrease interest rates already. Listen to exactly what he had to say, Iman.
We actually would prefer to get rid of the prime rate. It is not a very useful reference rate. There had been internationally a reform of reference rates, whether it was LIBOR, and if you were in London, people would be pricing, saying that so much above LIBOR, and in South Africa, we used to be saying so much about above JIBA. We are getting rid of JIBA. We are replacing JIBA with Zaronia, the South African overnight interest rate, and we also had to look at this. The thing about the discussions about the prime rate is that when rates are going up or are higher, that discussion does not feature. It always features when rates are going down, because then people start to look at this and they say, what these things is now.
And Arabile, I mean, from a macroeconomic perspective, again, that will have an impact. And I think for people watching what's happening at Davos, feeling a little bit far removed, what does that stance by the governor mean for the ordinary South African? What's the so what?
Yeah, so in the end, the hope here is that there will be a fair pricing when it comes to interest rates. So you and I will pay what he believes is a much more fairer, a much more understandable pricing range and rate when it comes to our interest, when it comes to our debt that we're paying to banks. And it hopefully doesn't become too exorbitant. Already, the South African Reserve Bank is targeting an interest rate, an inflation rate rather, inflation CPI, the rise in the price of goods and services, that is a little bit lower than they're used to, which will make it a little bit more difficult for them to move when it comes to those interest rates. So the hope is that things do become a little bit cheaper when it comes to how much debt we pay in the end. But whether it goes through or not, we'll certainly see. For now, however, it is just a proposition and something that the South African Reserve Bank is hoping to do to help consumers when it comes to their debt burden.
You know, Arabile, there's some continent discussion points every year when those global leaders gather in Davos in Switzerland. The way that it's framed is that it's for the elite, by the elite. We've seen the protests by various organizations with their own agendas, whether it is around climate change or other global topics that are challenging some of the narratives in the room. Talk to us about what's in it for particularly South Africa and Africa this time round, given the changes in global geopolitics, and what's on the agenda on this day 4.
Yeah, you know, it's very interesting that you make note of that, because we're anticipating to get a briefing from Team South Africa a little bit later on this afternoon, around 3 p.m. Davos time, I think the exact time is. And that is from the leader of the South African delegation, that is Finance Minister Enoch Godongwana, along with all the other ministers, whether it be Minister Parkstyle from DTIC, Ronald Lamola from DIRCO, you still have Stella Ndabeni from Small Business Development as well, you have Patricia de Lille from Tourism. So all of those are anticipated to come together to share a briefing to detail what exactly it is that has been achievable or achieved thus far to this World Economic Forum. Are there enough collaborators and investors? The whole point of getting here is to meet up with people who will invest further in South Africa and enhance what we already have. I mean, we've spoken about, for example, tourism, ensuring that people understand and know that there's more to the South African economy than just, for example, the Cape Winelands or something that somebody else might know, which is Table Mountain, for example. So enhancing what people think and know, plus also to give the aspect of understanding what is happening post-G20 in South Africa. That post-G20 leadership conversation happens quite a lot too here, to say, can South Africa still hold the mantle in terms of leadership, in terms of multilateral institutions and organizations and cooperation? And that seems to be happening a lot. A lot of meetings held by a lot of the ministers here, including the Electricity Minister, Kgosientsho Ramokgopa.
And you'll tell us more about that later. I'm just thinking more about the banks and, you know, doing away with the repo rate, or sorry, the prime lending rate could maybe just shift how they price their loans, and, you know, whether it really is going to make debt cheaper is something that we'll wait to see going forward. I certainly don't want to hurt their bottom lines. And it's an interesting, proposal that's been put on the table there. Arabile Gumede reflecting on conversations he had with our Reserve Bank Governor in Davos.